All right, welcome. How you doing today? I'm Raymond Modulin. I'll be the instructor through your title insurance pre-licensing course. Also with us is going to be Nick Welch a little later on. He'll be doing some of the topics as well. The goal of this course, obviously, is to get your title producer's license, and we have four sections that we really need to cover. The first section is going to be principles of title insurance, including the underwriting and escrow, and what title actually is and things of that nature. That's going to be about a 2 hour class. Principles of the Federal Real Estate Settlement Procedure Act. It's called RESPA. RESPA is going to be involved in that. We're going to spend about 3 hours talking about RESPA. Then we're going to get into the really fun part of the course. That's the insurance laws and the administrative rules. We're going to spend 4 lovely hours going over the administrative rules that you need to know for a title producer. And then the last section, or the fourth part, the last 2 hours, we're going to cover ethical practices and how to market and sell, and some ideas and tips and tricks for you guys to get started in the business. All right. Now, before we get started, if you're listening at home, I'm sure that you've got your own bathroom. For you guys in class, we have one right back here. And for the ladies, the bathroom is maintained by a man, so I apologize before we start. If you've got a question, raise your hand. And for those of you listening at home, I will try and repeat the question so that you guys can get it as well. All right? Other than that, any questions before we get started? Yeah. Will we take breaks? Of course, we're going to take some breaks. Take a break about every 45 minutes, 50 minutes. I want you to get up. I give it like a little 3-minute brain break to get you guys started and rolling along. So the first topic we're going to talk about is what is title insurance, including the underwriting. Some of the topics in that are going to be what is title insurance and how does it work? Why would people actually buy title insurance? And then these things called a defect. We're going to talk about how liens actually play a role in the title and how they affect the title. All right. We'll talk about a little bit of an underwriter and explain to you what he does. And we're going to talk a little bit about escrow in general. Okay. So first of all, before we get started, any of you guys ever remember playing the video game Zelda? I love Zelda. Now, I know that's showing my age, and I'm sure all you guys play those, bang 'em, shoot 'em up games. But if you remember Zelda, remember when Zelda used to bump, boop, she'd bump somebody, and that little diamond would switch from the top of her head to the top of the other person's head? Okay? That's how I picture the title working in a sale, okay? Because title is something that no one has ever seen. All right, no, you haven't. You've not seen title. You might have seen the title insurance or the title policy or the deed, but title is an etherical thing. All right. Title serves for two purposes. It proves that you own the property and that you, in fact, have the ability to transfer the property. It's kind of like an idea. No one has ever seen an idea. You might have seen the wheel that came from the idea, or, the microphone that I'm using today, or the laptop, but those originally started as an idea. No one can see that. You can't really see title, okay? We can see the insurance policy, and like I said, we use this thing called a deed to transfer title from one person to another. And if you're familiar with how that works, a deed is just a symbolic piece of paper so that when some person hands a deed to another person and they take the deed, boop, that little diamond from Zelda has gone over to another person, okay? So that's what title really is. It's an etherical thing that proves that we have the ownership, and we transfer the title back and forth using this piece of paper called a deed. Now, what happens in that is the buyer is asking for some things for the seller to prove. All right. So first of all, what the buyer is going to ask is the seller to prove, hey, do you own the property? Can you prove you own it? Are we going to take all the liens off of it? Will you help me fix anything? And we talk about deeds, and what the buyer is looking for is what's called a general warranty deed. All right. A general warranty. Okay, yeah. All right, hold on. A general warranty deed. There's 5 things. A general warranty deed is like the big mamaluca of how we transfer real estate. Okay, it's all done through a title company, through an insured closing, and hence why you guys are here, right? So, in a general warranty deed, I don't want to get too deep into deeds at all, but in a general warranty deed, there are 5 promises made. The seller promises that he owns the property. It's called the covenant of cession. The seller promises he will remove all of the liens that he can, and it's important you understand the section of what I just said about that he can, all right? Because the seller's going to pay off his mortgage. The seller's going to pay off any of the liens that he has accrued, like a mechanic's lien or taxes, so that you as the buyer or the next buyer coming along, hold on a second, I'll get right there, as the next buyer coming along can start new, all right? Now, go ahead. Yeah. What are, for those of you at home, you want to know if there are liens that you can't remove. Yes, there are liens you can't remove. Remember, or for those of you that don't know, we've got things like an easement, an alley behind your house if you live in the city where there's, when I was growing up, we had an alley that ran back behind our house, and, that's where all the kids played. We played tag on that, rode our bikes down the alley. That would be an easement. That's actually on somebody's property, or, you own and you have to take care of it. That is a type of an encroachment, or it's not really a lien because a lien's monetary. But I can't get rid of that. So when I sell it to a buyer, I'm going to get rid of all the liens I can get rid of, but some of the things I can't, like that. Maybe an easement, a power line easement. All right? So those would be some things that you can't get rid of. But I'm trying to get rid of all the other stuff to make sure that it happens. Okay? What are some of the other things? He wants proof that they own. It's called the covenant of cession. He's wanting to make sure that the seller removes all of the liens on it that he can. He's wanting this, what's called a warranty forever. He's wanting further assurance, and he's wanting this thing called quiet enjoyment. All right? What quiet enjoyment, or sometimes you hear it just called enjoyment, means that he has the right, this owner has the right to not be bothered by third-party people coming to harass him. It doesn't mean, no loud parties, not that kind of quiet enjoyment, right? So, once again, the 5 things. Let's go through them one more time. Here's what the buyer's asking from the seller. You own it. Do you own it? And the seller says, yes, I own it. You going to take all the liens off of it? The seller says, yes, I'll take all the liens off of it. He says, will you promise quiet enjoyment, meaning there's no one out there? The seller says, yes, I promise quiet enjoyment. He says, if they're wrong, will you promise to help me? That's called warranty forever. The seller says, yes, I promise to help you. And the last one is, warranty forever. So that would have been the 5 things, all right? What that means is, what? Was only 4? You're killing me, Smalls. Okay, you ready? Watch this. Here we go. Covenant of cession. Covenant of removing of the liens. Covenant of quiet enjoyment. Further assurance. And warranty forever. 1, 2, 3, 4, 5. 5. All right? It's not that big a deal for you, but I wanted you to understand it. So here's the point I'm getting at, though. The seller is making all of these promises to the buyer that he can do all of this, and the buyer who doesn't know the seller should say what? I mean, if the seller promises he's going to make all these outlandish recommendations, the buyer's going to say what? No, I don't know you. How do I don't trust you. So the seller says, how about if I go out and buy an insurance policy? You see where I'm going now? How about if I go out and buy an insurance policy that protects you, that says if I'm lying about any of those, you'll be covered? Okay? The buyer now says, well, sure, I'll take your 5 outlandish statements because I know that if you're lying, and the insurance company is going to cover me. Ta-da! Welcome to title insurance. Title insurance is an insurance policy like any other insurance policy, which protects the lenders and the owners against claims or legal fees that arise from disputes over the ownership. All right? So there are two main halves, I guess, of a policy. You've got the owner's half and you've got the lender's half. Now, here's the funny part. Both of them actually protect the new buyer if you think about it. All right? Let's look at the lender's policy there on the screen. Lender's policy, which protects the mortgage company. What it does is it tells the lender that they will be, in fact, the first lien position. Okay? Who does that benefit? Ultimately, that benefits the buyer. The owner's policy protects the owner and says, I have the right to sell this. Who does that protect? No. It really still protects the buyer, right? Because the seller's saying, I own it, I can sell it. So when the buyer now buys it from him, he's got protection that he, in fact, really bought something, okay? So there's two halves to that policy. There's an owner's policy and a lender's policy. Now, things to remember, because a lender's policy protects the mortgage company side of a buyer. If there's a deal with cash, there may never be a lender's policy, all right? Because you do not have to make promises to your mortgage company that they're going to be first in line and that they're going to get recorded and the second's going to get recorded second, because if you're buying cash, there's no lender's policy. So keep that in mind, that sometimes, I just did a deal recently. It was a little home down in the city, and the whole total price of the entire house was $12,000. The guy bought it cash. There was only an owner's policy. There was no lender's policy on that, okay? So right there on screen, you can see we can do a little example. When you buy a home and you get both a lender and buyer's title policy, if someone comes forward and makes a claim that they are the rightful owner, if in fact the title was wrong and the rightful owner of the home, your policy will likely pay the value of the home and the lender and the amount they lent you to buy the home. Got it? No. Okay, let's try it again. Okay, Dave, you sell me the house, all right? I got a policy. Somebody else steps up and says, I actually own that home, and there was a insurance policy, and they missed that ownership. It's like I had a car wreck, and now the insurance company has to pay for it. Same thing here. That's what they do, all right? So the insurance policy would pay my lender back so that he is made whole. Now, hopefully they would have found that. It's kind of a bad example, but hopefully they would have found that before we got any further down the road, all right?